Okay, welcome everybody. Welcome to Scalpathon. Welcome to the introduction session. The purpose of the session today is to go through what the rest of the week is going to be like and and help you understand what you should be focusing on and what you don't need to worry about. So that's our primary agenda today, is to get all that clear. I've got some bullet points up on the screen. You should all be able to see my main monitor. And so basically what we're going to do is we're going to kind of go through what's going to happen for the week and what you will be seeing at the different sessions and how the sessions are going to work. A couple of them are really long, and that's by design. And I want you to understand that what will go on when, and there's good times to not necessarily be there, and then there's times to be there. We'll try to schedule things as much as we can within that framework. And again, I'll explain more about all this stuff in a minute. I'm just kind of introducing it all. So let's see. I will talk about all of the different tools that I use and how I use them, and make some very important points about that. And then we'll cover any questions you guys have. And with whatever time we have left today, we will talk a little bit about the setups that we're going to see all week. Rather than spending a whole lot of classroom time on that particular piece, because the group is relatively small, and because we're probably going to see a lot of action this week. I mean, that we planned this thing, gosh, almost 3 months ago now, 2 months ago, and no idea that this was all going to happen. But this is perfect for learning about scalping. I mean, the market conditions right now with Ukraine and oil and everything that's going on, it just couldn't be better. So, given that, understanding what sets of conditions are appropriate for what setups is really the key to this whole week. So my original thought was I was going to go through the setups in a lot of detail this morning. And after thinking about it most of the week, last week, I decided that we would be better off doing that along the way. So all we're going to do at the very end here, again, time permitting, is introduce the setups themselves. And what am I looking for? And where is the edge here? That's what this is all about. Okay, so that's kind of our schedule for today. You must all already be in the stream in the pit. Zulip, if you are having any issues with that, please reach out to JVC. He is here as well. And we'll also be helping with any questions in the chat and whatnot through this session and through all of the sessions that he can make it to. This is a fairly brutal schedule, and I sleep on an odd, kind of around the clock. I sleep in bursts. So for me, being up at different times around the clock, 24 hours, is not that difficult. But, for most people that have other stuff going on, it can be complicated. So I understand that JVC may not be able to be here all the time. And
I already told my other half the other day that next week I'm going to be on a really weird sleep schedule. So if you ever want to nap at odd times, let me know.
Yeah. And, it could turn out this, for those of you observing, depending on what exactly you're doing. And I know JVC is trading some evaluations and whatnot. Yeah, there could be some really good opportunities at odd hours that we stumble into. I've found some of the best trades under these conditions are occurring during the night in my time. In other words, when the equities are closed and the futures are trading purely speculatively based on the news and the politics and whatever else. And that's turning out to be where there's a sweet spot under these conditions. The sessions themselves have been very, very volatile. Again, sweet spots there too. But don't discount, and that was the whole purpose of this idea. Let's look at scalping in all different times of the day, all different circumstances, all different instruments. And so that's what we are going to do. Let's see. Jeffrey, gold to spike to 2K on open, people pulling money. Okay, that's the kind of stuff you don't want to really think about while we're doing this. And let me tell you why. It's a really good example. You defined a bias by making that statement, Jeff. And this is, I'm going to talk about this all week, but it's a really important point, and I'm going to get to it in just a second, but let me introduce it with your question or your comment. The key to doing this really well is not to have any biases whatsoever. That's the key to being a good scalper. You can have context, where, this is what's going on the big picture, and I'm trading a small piece of that big picture. But if you have a preconceived opinion about what's going to happen, whether it does or not, you're creating a bias for yourself, and executing a good edge-based strategy with a mental bias is really difficult, because your mental bias is always going to be contradicting the strategy. And so don't do that. but I don't necessarily disagree with you. I'm just encouraging you not to think that way, particularly with respect to what we do here. So anyway, let's back up one step real quick. Most of you know me, but a couple of you don't. And I know there's about half of this this class students that are not going to be able to attend live, and for a couple of different reasons, and have made me aware of that. So I'm going to try to understand that that's going on. So first of all, real quickly, my background, most of you know me. For those that don't, I've been trading since 1973. And have traded everything. I started in options. I used to buy options on takeover candidates. That was my 1970s strategy, and it worked pretty well. In the 80s, I got into kind of day trading using index options. I used the OEX options in the 80s, and also traded equities and a bunch of other stuff. And then in the 90s, I got really focused on futures, and I've been pretty much focused on futures since. Most of the 90s, my primary instruments were oil and the crack spread, which is oil versus something that's refined from it. In my case, I used to trade oil against gasoline, the RBOB. But I got really interested in the idea of just price and volume in the very late 90s, when some of the charting platforms came along, eSignal. And I used to write code for eSignal and for TradeStation. And I had a day trading group 1999 to 2003 where we kind of played around with some of the ideas. And anyway, long story short, order flow data, looking at what's trading on the bid versus the ask, came along. Depending on what platform and how much money you had, mid 2000s was when that started to be available. TT had it, but not in any sophisticated forms until we started seeing around 2010, and slightly after that, Market Delta, and then Sierra Chart after that, Jigsaw. These were platforms that were breaking the trading up into what's going by on the bid and the ask. And for people coming from stocks, that was really confusing because we look at those two components backwards. And so that really, my whole trading world changed right around that time, the late 2000s, like 2008, right around the Great Depression, right about when that started. Because everything that I had done before was technical analysis-based attempts to predict the future based on the past, which is what technical analysis does for you. And, that was the best edge you could get then. And the word edge I'm using here to mean advantage. So, you could get a very slight advantage using technical analysis if you were really, really diligent about keeping your tools really current. And you couldn't just, well, the MACD crosses over, I get long. People try that stuff and it just doesn't work. So what happened as we got into the later 2000s and I started seeing what you could do by really focusing on the very, very short term, I got real interested in that. And that's really been my passion since. And I hooked up with Lee and formed TRG after I did a 3-month class in 2019, kind of just going through all the different trade setups that I had. And Lee had a background more structurally, more market profile stuff. And while I had studied that, I wasn't an expert in it like he was at the time. And so we formed TRG, and the rest is kind of history. We have a really, really fun approach to the market that's really accurate. And we have a good group of people in TRG that are trading around that. And so again, I'm just giving you all this background to understand where Scalpathon came from. So of the couple of hundred people that have been TRG members or are current TRG members, we've had a couple of different ways we've tried to work with a small group and on a topic. I had a scalping group and Lee had the structure group, and that was really useful, for a year, and it provided a lot of education, but it still was lacking. And so the idea of Scalpathon is really simple. What if your only objective is to get into the market, take money out of the market, and do that with as little risk and as little time in a position as possible? And that's what I like to do. That's my edge in the market. And I was talking to, in fact, CK, who's here, a couple of months ago. He was out visiting me, and we were talking about this, and I said, someone could just make a living just leaving their computer running. And if you walk by it, oh, there's a setup, I should trade that. And that's kind of what I do. My computer's always on. And a lot of times, some of the best setups I get are, I can't sleep. I'll get up in the middle of the night. I'll, watch a movie. I'll go look at my computer. Oh, wow, look at that. Something's happening in Europe or something's happening in Asia. And some of the best trades are there. But you can't just go into those randomly. You need a methodology. And it turns out, again, the edge that I have developed for myself over the last 2 decades, focusing on the very, very short term bid versus ask, the auction itself, turns out to be really good for that. So that's what we're here for. And crack spread jokes, exactly. I will glance over to the chat now and then. Please feel free to make comments, jokes, very informal. Throughout the whole thing, this entire class, the Scalpathon for the whole week will be informal. So feel free to do that. And anyway, so that's the background. Let's get started on the overview and the agenda and all the different pieces. And if you have questions, you can ask along the way. I will try to address them. I'll pause for them where it's relevant. For some of you, some of this will be a review, if you've been in TRG for a while. But don't start doing something else because, oh yeah, he said that before. Don't do that, because what I'm trying really hard to do here is make it really specific. So not only have you heard this before, but this is all you need to focus on if you just listen for the key points. And so try to do that. And let's see, I think that's all the introduction stuff. I'm just looking at my notes real quick.
I can make one suggestion. And
please do. Please make any suggestions. Your opinion is always helpful. Go ahead.
So TRG members have been around a while, probably know this, but especially for the new folks, but really for everyone. When you ask a question in the chat, keep in mind that Jeff is probably going to be completely engrossed in his screen and in focusing on the market and what he's doing and what he's thinking about and what he's saying. And so he may not see your comment for 3 minutes or 5 minutes or 10 minutes, depending on what's going on with the market action. And so if your comment is or your question is something like, does that work at all times? He's going to have no idea what you're referring to. So when you ask a question, just try to give him the context of your question and do it in as complete a sentence or paragraph or several sentences or whatever as you possibly can, so that when he glances back at it long after the thing that you were talking about or asking about is gone, he'll know, oh yeah, you're talking about that thing we did 6 minutes ago. I know exactly what you're asking about. So yeah.
Exactly. That's a good point. Thank you. I brought up this picture just so you guys understand. We're over here on my right monitor, which is a LG 38-inch ultra-wide WQHD resolution. And the Zoom stuff is over here on this monitor on the far left, so I can see it.
Way far away.
And I have to make a point to look over there. And so anyway, and also it's important to understand we're going to focus on what's on that main monitor, but I'm going to show you every now and then an example of what's going on the other monitors. And so you can put that into context again, which is what I do with it. Most of what I focus on is on this main screen, and that's why we're gonna pretty much stay on that. Okay, so that's good stuff. Let's proceed. So I'm just going to go through this bullet by bullet, and I'm going to try to be really clear. There's a couple of folks that are translating to other languages, and I always respect anyone that has the ability to do that, particularly in a live session. And also there's some people that are going to be looking at the closed captioning. So I'm going to try to speak as clearly and as slowly as I can. And clearly for me usually isn't a problem. Slow sometimes can be a problem. I tend to have a lot of energy for an almost 62-year-old. And God, that blows my mind. Anyway, that's a week from yesterday. Yep. Kill me now. Okay, so what to expect, the syllabus, the prerequisites. Okay, we're going to talk about the syllabus in just a second. Prerequisites. You should have done both of the tick maker courses. There's a lot of material in there that I'm assuming you know, or at least have been through. If you don't know it, for sure, or if you don't totally understand it, well, that's cool. That's why you're here. But for example, if I'm explaining, if we're watching a bid-ask battle at an inflection point price, and I'm saying, okay, now we're looking for a lift here, you should understand I'm talking about lifting the ask up, and that's how the price will go up from that spot. And so again, this is all in the tick maker stuff. Feel free to ask a question if you don't understand or you want me to clarify. You can always do that in the chat text, and I tend to watch it again out of the corner of my eye, so I will try to clarify stuff, but don't ask me to explain why price moves from scratch. Again, that's why we really thought the right way to do this was to really get everybody through the fundamentals so they could really focus on the core of the concepts that we're teaching. So hopefully all of you had done that. Another prerequisite that I recommend besides the two tick maker courses is the book Thinking in Bets. I posted that in the pit as well. It's a really small little book. You can read it in one night, and it just is a really good little book. It's a really good little book about just a really simple way to evaluate decisions without using a lot of emotion. And that is something that is good for scalping or trading in any strategy, whether you're scalping or swing trading or investing over 20 years. That Thinking in Bets is a critical. Is the ebook name in the Scalpathon stream? It's not an ebook. It's actually a real book. Are you talking about the one I just mentioned?
It's available as an ebook if you want it in that format.
Oh yeah. Just I don't want people to like download rip-off copies of it.
Right.
Please pay for it. Even it's only like $4 or $8.
Yeah.
Because really, that's just out of respect for someone else's intellectual property. Let's see. I thought I posted it here. Recommended reading. Yeah, this is the book right here. So you can jot that down. Annie Duke, Thinking in Bets. Okay. And again, please do stuff like that. If you want, what's the name of the book? I'll say stuff like I posted in the pit, but I'm happy to put it up on the screen and repeat it again. If somebody's listening and not watching it, we want to cover all the bases we can. So we will be happy to do that anytime. You know what? I'm going to leave this here for a minute because we might need it for other stuff. All right. So that covers the syllabus and the prerequisites. I'm going to talk a little bit more about what to expect on each topic, but basically our mission here is for you guys to see a very simple approach to scalping that works pretty much 24 hours a day, as long as you're mindful that, the opening of regular trading hours is very different than the middle of the night. And that's the kind of stuff we're going to talk about. And it's also really important to understand that this takes time to learn. It's not complex. It's not like learning physics. It's nothing complicated. These are simple concepts, but to execute them well is it's a learned skill. It's just a matter of practice. And people that don't understand that, they think, okay, once I've seen this, I'm going to go do it. And it just doesn't work like that. You've got too many conflicting things going on in your brain as a human being to see something and just go do it. But what we're going to do is we're going to break it into the pieces. For example, for every setup that I show you, I'm going to tell you basically I have 3 rules of each setup, 3 things I'm looking for that tell me, yeah, it's there, no, it isn't, or maybe it's there, or maybe it's not there, good, And I could make that much more complicated. And I promise you I have. Some of you have been around for a while in TRG. You've seen some of my old process playbooks. Some of them were 70 pages of Excel with all kinds of formulas and whatnot. And the result of the last 5 decades is I've simplified that down to really simple points. Here's the 3 things you got to look for this type of scalp, and here's the 2 things for this type, and if they're there, then go for it, that kind of thing. I'm trying to make it as simple of a decision process as possible. So don't overthink it. It's simple, but executing it quickly when it's happening is what's hard. That's what you have to just practice. So you will see examples of me doing it well. Because we're doing it 24 hours a day and I may have just woken up right before a trade, you may see me do it poorly as well. And that's what I want to happen. So point 2, this is educational, not representative. Let me explain what I mean by that. My purpose here, and this is the disclaimer portion of our introduction, my purpose here is to teach you techniques. On any given trade or any given day or any given week, an expert at this, myself, may or may not make money doing it. That's just the game. I've gone for an entire month and had one winning trade and just could not get out of the gutter. And that every good trader will tell you that that happens. It's called a drawdown, and it happens for lots of different reasons. But I can't promise you we're going to make money all week. Most of my scalps are successful. I've posted lots of results, but I do make mistakes and I do blow it. So don't look at the success or failure of what we're doing by the P&L, because it really doesn't matter. It's just a way of kind of keeping score. I do have an objective with the P&L. We are going to run an evaluation here for one of the funding firms, and I'm going to run that and a cash account together. So we're trading real money and somebody else's money, and so I want to keep track of the P&L, but I can't promise you we're going to make money all week. I can't promise you we're going to pass that evaluation. I'm going to do what I do, and I'm going to explain it, but I'm human, and stuff happens. So this is going to be totally representative of reality. That, no BS. If I make a big mistake, it will cost me a lot of real money, and you'll see that happen. Okay? So focus on the education component. Don't focus on duplicating what I'm doing while I'm doing it. That's a total disaster. Shut your computer down and watch what we're doing on my screen. This is really important. I've already posted my templates for all of my software in the pit, in the stream that we're all in for Scalpathon. But I cannot emphasize strongly enough that you should not spend all day today, tomorrow, trying to set your machine up to match mine. Don't even go there at all. Don't do any of that until after the week is over. Use this week to see what we're doing so you understand how I use those tools, and then you can implement them into what you do yourself. Also, along those same lines, most of this stuff stands pretty much alone. And if you try to add other indicators or tools into the concepts, all you're going to do is muck it up and make it less accurate. So, don't say, oh, I really like what you do with ranges and the linear regression, Jeff, and I'm just going to add the MACD to that and it'll be perfect. No, what you'll do is you'll take a system that's already optimized and you'll de-optimize it. We know this from experience. We've seen this over and over again with people coming into TRG with something from their past that doesn't work very well, and they're trying to improve it, and that's how they think you do it. And that's not how you do it. The right way to do it is get rid of all your old stuff and just look at this and just watch and see if this makes sense for you. And then if it does, go back and implement it afterward. Learn the examples. Yes, if you have some of it up and running and, you see some of this going on during the week, by all means, try it if you're comfortable with that. But don't try to trade and watch me at the same time. You will do both poorly, I promise you. You'll lose money or not make the money you could, and you won't understand what I'm presenting. Okay, let's see. Okay, the format. Let's talk about this one. So for the sessions, you know what? That's a good time to bring up this other document. So in the stream, I put up, let's see, where is it? Syllabus. Okay, so this, why does it do that? Hang on a second. Make this easier so we don't have to look at it in that browser. Give me one more second. Okay, Zoom, thank you. Okay, that's what I want to do. Okay. What is that behind? Oh, that's this. Okay. Sorry, guys. One more second here. And where's that? All right. So let's just get this next to us. What's a good spot? Over here works. Okay, there we go. Alrighty, so for the sessions, I want to go through what the format's going to be like. Rules of engagement, which is, I've already covered most of that. That's just my way of, what's okay to do and what's okay not to do. And pretty much everything is cool except, pressing your belief that your MACD should be added, debating something, don't do that. We're all here to learn this. if you want to teach your stuff, do your own session. And people do that sometimes. They want to explain to me why I'm wrong and I should be using a fib here or whatever. And that's not why you're here. If your stuff works so great, you wouldn't need this. So, don't do that. Anyway, other than that, feel free to ask any question. There's no such thing as a stupid question. I will try to explain stuff. I may refer you back to the TickMaker material because the explanations in there are really good about how different mechanics work in the market. But I'll try not to do that unless I have to. Okay. Again, I already mentioned the P&L. We will track it, but I can't promise you anything on any given week. But I'm usually pretty good at this. And if I'm not doing well, we will be analyzing why I'm not doing well, looking at that. But we're not going to focus on the P&L. We're going to focus on the opportunities. The recordings will go up as fast as we can get them up. And normally the lag is, JVC does that, and normally the lag is how long it takes Vimeo to process them. So we will get them posted in the library as quick as possible. And I strongly recommend if you miss a session or part of a session that you try to catch the recording of that before the next session. And we are going to crunch the recordings down where there's blank time, which is the format issue. Let me go back to that and talk to that for just a minute. You know what? I'm going to turn on the spotlight thing here. Okay, so the format for each one of the sessions is going to be a little different, but it will always follow the same convention. So, for example, at 3 o'clock in the morning, tomorrow, all right, my time, 5 o'clock Central, is our first trading live session. You guys are also invited to the Globex Reopen today, Sunday, but that's a standard TRG session. I generally don't trade very aggressively there, although today could be interesting. So that could end up being one we do trade. But this first one on Monday, early in the morning, we can see how Europe's going to react to whatever's been going on all weekend with Ukraine and with the SWIFT stuff. And so this could be a very interesting time. And that's going to be true of each session. There's something there about the time that I chose specifically. And so the format's going to be as follows. We're going to start the session and we're going to get a quick understanding of what's going on. Like, for example, tomorrow morning, it will be 3 in the morning for me. It'll be 5 Central. So it's a couple of hours before the equities open and Europe is going full blast. So what we're going to be talking about here is how Europe is different going into the pre-open or before the open of equities in the US. But if we get through that topic and there's nothing else going on and we're not trading it, then the session will go quiet. I'm not just going to talk necessarily for 2 hours if there's nothing to talk about. So everything important in each session will always be front and back loaded to the time. So the important part will be the very beginning and the end of the allocated time. And if it gets quiet in the middle, there may be nothing happening. And I may just put up a note on the screen, it's quiet, I'm going to go take a nap for an hour, whatever. And so you may see that. But if there is specific material for each session, and there is, it will always happen in the first hour or at the very end. And I'm scheduling it for the first hour of every session. So talking about trading Europe into the pre-open, I'm going to start that as soon as that session starts at 3 Pacific, 5 Central. When we're done with that, if it's quiet, we'll take a little break. If it's really busy at 3 o'clock, I may push the explanation to the end of that session toward 4 or 5 o'clock and do some live trading instead first. So that's what the format's going to be like. And it's going to be like that for every session. So I really want to be clear. Living on the West Coast is, well, you know what? You could argue them both, Charles, but I hear you. Anyway, so that's the format. Does everybody get what I'm saying here? I'm trying to make it relatively flexible so that if we open a session up and it's just like tomorrow morning, let's say it's just crazy good trading. I don't want to have to go and stop and talk about my material and do a PowerPoint when we could be in the actions. And the action may die down an hour later. So we're going to be flexible about that. But each session will have a topic and you can see what they are. For example, Monday, the first one, is the pre-open, Europe and the pre-open. And then the next one is our standard Ides of Monday. Wherever I say guess, that means, that's a standard TRG event. And then Tuesday morning, we're going to talk about the midnight oil trade, which isn't just about oil. And we're starting a little bit earlier because that's when that typically occurs. So this will be about oil and gold primarily. And then a little bit more about the equities pre-open, but we're farther away from it time-wise, right? So, and again, this is a really long chunk of time here. So it looks like this is that's right. And so, I'm not just going to try to talk for those 3 hours. We want to cover the topics, and then, we'll go with what's going on. And understand, if you cannot attend live, I get it. But boy, if you can, and you can interact with this at all, even if just some of the sessions during the week, it will really benefit you, because there's some really crazy good stuff that happens during the night. And that's why, that's the entire purpose of doing this. And I know for many of you in different countries, my nighttime is your daytime. And so this could be perfect for you. You could do, come home from work and trade some of these things in the afternoon or the evening. So anyway, we'll talk more about the individual sessions before them. What I'm doing, the format that I'm doing in the in the pit for this is, you will find each session, I will post the syllabus with like session 1 introduction. This is today. I'll post the syllabus and the link to that. And then I will post all the links together here. And as of right now, this is the links to Zoom sessions portion of the Scalpathon stream. I posted this one already. And then session 2 is actually, we have the reopen for TRG. And so this is not just for you guys, it's a TRG one for those of you that aren't TRG members. And it's slightly different instructions to join the meeting. So make sure you read that. And then the sessions that are specific for the Scalpathon will have it the same format and instructions like we have now. So you have to pre-register for that. So this is that session tomorrow morning. That's our 3rd session as a group. And then the Ides of Monday is another TRG event that you're invited to. And this is how to join that. And then I will be trading live the initial balance on for an hour. And I do that at this time. And again, this is a TRG meeting. And I note that. And so you have to use these instructions to join. So right now, the links for everything today and tomorrow are posted. And then as we get through events today and tomorrow, I'll start deleting them from here, and I'll start posting the next sets of links so you can sign up or join the meeting. But it's important to understand that if it says you must register, that means it's one of the meetings you have to go to Zoom, register, and then you'll be sent a link to join. If it's a TRG meeting, you just need to grab the instructions here and hop in. You don't have to pre-register for that.
There's also one important note real quick for everybody else.
I was just going to ask you to clarify anything.
Perfect. So, because this is a recent change actually for us, we just began implementing this a couple weeks ago, so we're even still getting used to this. But for the TRG sessions specifically, Zoom requires you to be logged into Zoom in order to access the meeting. Now, that doesn't mean, however, that you have to create an actual Zoom account and give them your email address and all that unless you wish to. I just use my Google account. They allow you to use Google or Facebook to log in. I just use my Google and boom, I'm in. So don't get confused when you see this message pop up that says, you must be logged in to access this meeting and think like, what the hell? I don't have a login. Just use your Google or create one. If you like to have separate names and passwords for every single thing, you can do that too.
So you're talking about the TRG ones where they're just joining it. They have to be logged.
Yes. When you go to join that meeting, Zoom is going to detect that you're not logged in. Wait, halt. No one may pass, and
got it. Okay.
That confuses people, but just use your Google or Facebook and boom, you're in.
Are there any questions about any of that? So let's just back up. So this is where all the links are for the next, again, I'll post a day or so at a time. I don't want to overwhelm you with links, but it's important to understand we have a really busy schedule. And let's just blow this up here and really dive in. So this is right now, we're doing this first one, and then we have the reopen, and today's reopen could be wild because of, the Swift stuff. The Swift thing happened after the close, and it's very important. It basically, the way money is moved around other than cryptocurrency, has been severely handicapped for the Russians, and this could really rile the financial markets in all different directions. So the Globex could be really interesting, and that's this afternoon. And then again, early tomorrow morning, the Europe pre-open, and then Ides of Monday, TRG event, and then we will do. I don't have on here. Look at that. There's one missing from here.
Oh,
I just realized, which is the other one that they're guests at on Monday. So.
Oh yeah, your Monday session, right?
Yeah. Okay, let me just make a note to fix that real quick as soon as this is over. Yeah. Monday. So the Monday TRG CME session needs to be added to that. Okay. Yeah. I will do that. All right. So let's see. I'm just looking. Oh, there's tons of bonus sessions. Exactly. All right. So let's see. We talked about format, rules of engagement, recordings, downtime. Okay. This next point, really important. Don't focus, and I'm going to say this at least 5 times. Don't focus on duplicating my tools and getting your computer set up so you can watch what I'm doing on your computer. That is a total waste of time, and you will miss everything, even if you get it working. Focus on the screen that I am showing and what I'm talking about, because there's times, for example, specifically when we're looking like on the jigsaw domes and we're looking at the bid-ask volume as it's real time, as it's going back and forth right at an inflection point. And that's really critical stuff. And I'm going to be talking about those numbers as they're changing, and they're going to be changing really fast. And so you just want to dial in on what we're looking at and really try to get the points of that, and then later go back and try to apply it to your own stuff. Okay. We're going to go through my screens and how I use my tools. And that's going to be the last piece of this. We're moving pretty quickly here. So I think we'll be in good shape here on time. Let me just write myself one more note here of things I got to make sure that I do. Okay. All right. So without further ado, let's move on. We can get rid of that. Okay, so what I'm going to do here, I'm going to get rid of everything but what we are talking about at any given moment. So we are going to start over here on the far left. And this is the portion where I am going to go through each one of the tools and what I do with it. Now, I cannot emphasize strongly enough the following statement. I'm going to make the statement, then I'm going to take a really quick break and let you guys do the same. I'm going to refill my coffee, and then we'll get started. So if you need a break, we're going to take one in 2 minutes. So just hang on there. Really important point. Everything on my screen, and this is a rule I made for myself about 20 years ago, and I constantly enforce this rule. Everything on my trading computer, everything that I am looking at when I am trading, has to have a specific definable purpose. If it doesn't, it's gone. Because this game is about less information, not more. And I know when you're new, your desire is, how many indicators can you get that all agree that this is a place to go long? Because you think that's better than only one indicator telling you that or whatever. And nothing could be further from the truth. You want simplicity, but you don't want to rely on a tool to turn green or to turn red to tell you something. You want to understand what that tool is actually saying to you. And this is the critical point. So everything you see on my screens, I mean, and just to emphasize the point, I'm going to put everything back up here for just a second. So this is all the pieces. Obviously, there's no data running on the domes, but that jigsaw, and this is Sierra for footprints, and then this is Ninja for price action, and I will explain these all in a second. But the point is that literally every item, every line, every bar, every volume indicator has a very specific purpose. And if I'm not looking for that thing, I don't use that tool. So it may seem like this is really complicated and there's lots of different pieces of information, but the reality is when they're compartmentalized properly, it's really simple. And that's what you're striving for is that simplicity. And so right before we do take a break, I want to just put one other thing up here. I've got this, but this needs to have an image that goes with it here. And again, if you've been around TRG, you've seen a lot of these, but this is just that this is This is such a what's the right word? Profound. This is a profound view of certainly of what we do. And where is it? I know it's in here somewhere, but I can't see. Jeffrey, where is it? Well, you know what? Let's go ahead and take the break. I'm looking for my my simple thing from Steve Jobs. I know it's in the pits. I'll just grab it there, and I'll copy it in here.
Definitely there.
Yeah, it's down here. So process. Okay, there it is. And simple. Cool. That's what I'm looking for. So let me just grab that and I'll copy it to where we are. And again, we're going to take a short break. Come on, Zoom. There we go. Okay. God, Zoom even impacts how fast it will let me copy a file. It's like annoying. Okay, scalping is simple. This is what we want. We want this to go here. So, God, it even impacts uploads. That's interesting. I hadn't noticed that one before. There it goes. Okay. All right. So this is a profound statement. Focus on that for just a minute. We're going to take a quick break. And then when we get back, we're going to look at all the different components and what their purposes are, and how not to use them when they're not providing that information. So the first part we're going to talk about, sorry, I'm not drawing a straight line down here because it's going on my other monitor, but the first thing we're going to talk about is these 4 panels right here and what the purpose is. It's real simple and it's real useful for any type of trading. This is probably the most visual thing we have. So let's talk about it. All right, we're back from break. Okay, so first part of my toolbox that I want to talk about is always on the far left of my screen. You're going to see 4 charts, and I tend to keep them on the instruments of the indexes. So ES at the top, NQ, RTY, and YM at the bottom. But occasionally I will flip the bottom one to oil or gold rather than having to have those always up. I don't look at them that often, just certain times of the day. So you will see that happen too. I'll just switch the instrument and the one next to it will switch all's well. I'll talk about those in a second. But for now, I just want to stay over here on these left panels. So the main thing we are looking for here as traders in general, but certainly as scalpers, is I am looking at the relationship between price and the volume. And this is just wave volume. This is a simple Wyckofian. If you are a student of Wyckoff, this is an implementation of part of Wyckoff's system. It's a very small piece of it, and it's a very useful piece of it. What we are looking for here is question number 1, is there any sort of definable trend at the moment? And for example, if we look at this is Friday's session. So if we look at the beginning of Friday, the session opened right here. And so this is all overnight up until this point. And this part here where it got real active right before the open, that's what I call the pre-open. And we're going to talk specifically about that tomorrow and Tuesday. So keep that in mind. Right here is where we opened. And it opened strong for a second, and then it came back down. And so we had this kind of two-way action that was going on as the market was digesting the open. It does this every day, and we'll talk about this a lot when we talk about the Open 5 setup. But the point about this particular tool is what happened after that, as the market started to settle into a range and price discovery basically is what was going on. The auction was going back and forth, and we set, what became the first hour low, and then we kind of started trading up, and we set what became the first hour high. And after that, we started going strongly away from it. So I want to just point that out is this is the time and the condition where I would say to myself, okay, this was clearly not trending behavior. It was going back and forth and pretty aggressively at that. So that's price discovery, and that's tricky to trade. But once it kind of established that spot, it started developing what appears to be the beginning of a trend, and it's above the first hour high, and that that's positive if you're looking for a trend up kind of thing. So I'm just going to go to the rest of the day here real quick. So we're back here, right? And so that's where that started. And I want to point out some very specific behavior here. This is what this tool is for, and we had the condition that it's looking for on Friday. Once there is a definable trend, you don't use this tool at all if you have the condition we saw at the open, where it's going back and forth. That's two-way trading, that's price discovery, and having this tool that I'm showing you right now is useless under those conditions. All it will do is confuse you. However, once the market does establish any kind of directional behavior, this becomes really, really useful. And what you're looking for is simply Wyckoff wave volume. And you're looking for, if the trend is up, you're looking for behavior that we call springs. And springs are very simple. We go up with some amount of energy. So from this point here, let's say this whole thing started here. The first burst up was 72K of volume. And so that amount of energy, and you can see in the bar by bar delta that buy side is stronger than the sell side, but it didn't just go straight up. It caught a top briefly and turned. What you're looking for is comparing how much energy it went up with how much energy it came back on each pullback. So 72K versus 28K. This is a small chunk of that. So the pullback had much less energy than the burst up. And when you see that, if it continues back in the direction that you want to trade, in this case, this potential long trend, remember, we can't see this yet because it's developing, but the spot you want to look for is right there. When you get to where that peak was, does it blow through it? That's what a spring is. So if you have a low volume pullback, you are setting up for a spring event to happen when you retest that high. And in fact, that's exactly what happened. We blow through that really aggressively. The buy side kicks up again, and then we form another peak. And again, those peaks are much bigger than the pullbacks. We went up 72, back 28, up 66, back 24. We went up 84, back 29. You get the point. We are following a direction, the aggression on the upside much more significant than the downside. This is a wave volume spring long setup, and you're looking to buy the pullbacks. As long as the range doesn't go into consolidation, because as soon as it does, the trend has ended. And an example of that would be after this big move up, it went into that for a couple of hours. It went into what we call ebb and flow. And that behavior was no longer higher highs, higher lows on lower volume. It became higher, lower, high volume, higher volume, lower volume, higher volume. See what I'm saying? That it went from being a one-way conversation with the aggression only on the buy side to being a two-way conversation for a few hours. And then we got a little bit more of the trending behavior going into the close, and the session ended. So this is a perfect example of what this tool is for. And again, don't overcomplicate it. When the market is not directional and it is not trending, I don't use this at all. It literally does nothing. But when there is a directional behavior, I'm looking to see if that situation is occurring. And the exact opposite occurs going the other way. So you can work this to the downside too. I'm scrolling back to see if we can see an example within this data set. Yeah, here's a decent one here, but it was too fast. But anyway, my point is, there's one right there. If it's going down, is the same thing. You're looking for the downside volume to be more aggressive than the upside. So here's, down 19, up 4, down 7. You see, that's what it was doing there. And I've got this indicator set up. This is in Ninja, and we have another template of this in Sierra that we will share with you guys later. They're up in the pit, but don't worry about getting it set up on your computer. Listen to the concepts, understand how it works. The idea here, the indicator gets bright green when it's a higher high and kind of pink when it's a higher low, and then I have it turn kind of bright red when it makes a lower low, or a lower high is kind of a less bright green. So that's a simple way of just keeping an eye on that. And it's really powerful when you're looking at this across all 4 of the indexes at the same time, because like Friday was a good example. Again, they tended to trend very strongly all together. Hang on a second. I'm going to sync them all up here so we can see that. So if we go back to sorry, I'm grabbing indicators here. I don't want to do that. If we go back to that time, and one other thing I'm going to tell you about here in a minute, so there you can see that was that going on there. And if you look at that point in time on any of the other indexes, they were doing exactly the same thing. And I can sync them up so that they show this together. I don't want to distort everything by doing that right now. But see, there's an example of what NQ was doing when ES was doing that. And it's the exact same behavior. Up 28, back 8, up 30, back 9. So the purpose of these 4 panels is to determine if we are trending. That's the first question. Are we trending? And the definition I use of trending is it directional at all? On a 1 to 5 minute chart. Any more than 5 minutes is just way too much data and it's useless. And I prefer to do this on 1 or 2 minutes, sometimes 3. If you go out to 5 or 10 minutes, everything is a trend, and that's the danger of using this with longer time frames. Look at this move on Thursday and Friday. It doesn't show you the detail you need to see. So 5 minutes is too long. It will give you an idea if there's directional movement or not, but it won't show you ideal spots to enter. What will do that though is if you go fast. And fast is better. And see, look how, every pullback stayed within, the definition of that trend. And again, this tool that's defining the trend here for us, that's just simply in Ninja, I'm using Super Trend. Again, this is in the pit. It's in the stream, the templates. That's a free indicator. We have another version of it for Sierra charts and what the settings are. But I'm not relying on where it says the trend is. And this is a key point. I've got it there as a visual to teach the class, but I don't look at that and say, okay, if it goes through that, the trend is off. What I do is I just look at the action of the price. This is my view of it when I'm not teaching it. Putting an indicator on a chart like this is a way of handicapping yourself. If you're new, it might keep you from making mistakes. And that's why I'm teaching it with that tool on there. Because if you do put a trending tool on like that one, and let me bring it back up here and you'll see what I mean, it will keep you from being really wrong. Like if you're buying the pullbacks here long and you keep doing that and you're still doing that up here, a tool like that would say, hey, guess what? That trend is no longer. It's going back and forth now. So that's the usefulness of it. But I encourage you, what's the right word? I implore you not to rely on tools that turn green and red and to just look at the price action because it's telling you everything you need to see. Okay, I'm going to pause there because that's basically what this left-hand panel is for. And the only other thing that's on it is the bar by bar delta, and that's just a way of seeing the accumulation of the energy as it's moving. So, for example, on this 1 minute view, we can see that it was kind of two directional down here. Let's push this over so we can see as it unfolded. So if you look at the up and down price action and the up and down of the bar delta, and what that's just showing us is the trade on the bid side or the ask side. Go back to the tick maker material, you'll get that. That's what bar by bar delta is. Just for this particular bar, that amount of volume from that price to that price was the delta on the buy or sell side. For that particular one, it was heavily on the buy side. So my point here is two directional, aggressive both ways, that really aggressive down there, but generally, more on the buy side than the sell side, but balanced because of that big chunk of aggression. And this is in contracts. So that right there was a 1 minute burst that was 1,800 contracts on the sell side. That's a lot in a minute. So this was two-way action. But what changed once it settled down is it held what became the first hour low. It took out the first hour high, and it did it on no more of that extreme energy. So it became clearer that, see, from once you get past that big bar, it's pretty balanced and we're going up. So that tells you that we have an orderly market with a bid under it. And so that's the purpose of that. And if you are looking out at 3 or 5 minutes, you'll find that the bar by bar delta kind of compresses together, and it again can be useful to show you the points where the beginning of the energy flipped over. Like this is a really good point here. Again, this is that two-way stuff, and you can see it looks pretty two-way if you crunch it together there. There's no real bias in the bar by bar, and the price was going back and forth. But then look what happened after it started to break the first hour, what became the first hour high here. After that, right there, it became much more aggressive. See how that bar is much bigger than the rest as we were leaving the range? So you can see that the trades were going by on the ask, and the ask was getting lifted because that's how price goes up, and price was going up. Does everybody see that? Does everybody understand what I'm saying? And this is a decent example of it. Sometimes they're clearer than that, sometimes they're not, but I think that makes the point. So I'm going to pause here. And with respect to Wyckoff wave volume, as I use it and as David Weiss used it, he used the exact same approach here. Are there any questions about how this panel is useful? It works exactly the same if you're trading NQ. There's the NQ portion of the show right there. Let's go to 1 minute, and you'll see you could use exactly the same tool set to trade NQ. And up on 20, back on 11, up on 28, back on 8, up on 30, back on 9. And God, NQ really was displaying the delta. Look how aggressive and increasingly aggressive the deltas were. And, even though there was some aggression, on the sell side at the open, it could not hold the price back, and the sellers just got run over, and the ask kept getting lifted up, and it just kept going. So that's a really good example of that. Look how from this point here to the right, from once we broke the first hour high there's almost no aggression on the sell side, whereas to the left of that, when we were two-way, look at all the aggression down here. It was two-way aggression. So just looking at that simple piece right there can tell you which side you should be on. This, two-way aggression, two-way trading. Over here, from up until right here, then from this point going this way, look at the aggression. It's much bigger on the buy side, and of course, price went up. Duh, that's what you'd expect to happen. Because, if you're hitting the ask and you run out of people that are at the ask, then the ask goes up, and then there's new people there and price goes with it. That's just simply price action. Okay. Loud and clear. I see one piece of feedback. I see no other questions or comments. Either everyone's totally getting it or they're doing something else. So, okay. Anything we need to clarify on this, JVC? You know this pretty well. JVC's probably doing something else too. Okay, thank you, Elaine.
There we go. I was muted and didn't realize it. Okay. So yeah, I think the bulk of the people who are here, this is review. So I think most of them are just going, yep, that's what I thought. I understand. But certainly to the new folks, or the few total new folks to this, or at least new to our presentation of it, Jeff's way of doing it, if there's anything at all that's even remotely not clear, this is a really good time to ask, because we're not dealing in a live market. We're not going to have a sudden opportunity pop up. There's no distraction. It's calm and quiet. And this is probably the last time it'll be like this.
Exactly. Oh, that's so true. From the minute we have the reopen this afternoon, for the next 6 days, 24 hours a day.
It's going to be insane.
It's going to be totally insane. And, you look, if you're a good trader, you could make a lot of money this week. But if you're still a new trader, you could lose a lot of money this week. So This would be a great week to learn how to trade a week like this, rather than really focus on how rich you can get this week. That's my suggestion.
I've got to be extra careful this week, and I'm not even scalping really. So
yeah, the reason that, one of the reasons I decided to do an eval as part of this, for one of the funded companies, is that if you're scalping, passing evals should be pretty straightforward, because the trailing drawdowns almost don't apply to you. Because, if you're scalping, you're not going to have big winners that you're not taking. And that's where the trailing drawdown hurts, where it, comes back. So you're taking constant winners and you're stopping losers quickly. So it'll be interesting. Again, I'm not making any promises about my abilities. I did really well last week. And so that I'm psyched up, and I've done well in these kinds of conditions. They're ideal for my technique, but anything can happen anytime. Okay, so cool. I see the comments. Everyone mostly reviewed. Good. All right. So let's talk about the next piece. So next to the 1 minute to 3 minute, 5 minute views, generally they're on 1 minute, is my 15-second views. And sometimes I go a little faster. Right now they are on 15 seconds, and I will leave them there unless there's a reason to change it. And what these are is if we are looking to see if there's trending behavior and energy going one way or not on the left panels, what these are doing is saying, well, if we are seeing that energy, it's going to be really obvious, because the 15-second views are going to be all going up. But if we're not seeing a trending behavior, most rookie traders, if there's no trend, most technical analysis doesn't work. So the market's choppy, we're trading in chop. There's no money to be made. And you'll hear pros say the exact opposite. When the market is range bound, that's ideal because it's predictable. So that's where I will actually scale up. I'll trade more size in a range bound market because I know what the range is. I know what my risk is, and I can therefore be more aggressive. However, in order to do that, you have to have a very mechanical idea, and this is the key point, of what quote unquote the range is. If you're a human, the range is going to be whatever you think it is at the moment. And that's the danger. Humans are stupid. We make mistakes based on our biases. So the methodology that I use to avoid that is linear regression. I let the linear regression tell me the range. And again, most of you know how I do this. It's real simple. There's a fast one and a slower one. And we're just looking at, is there a definable edge to the range at the moment, either at the bottom or the top, that we can trade? And because linear regression is real time, it will only display on the current data, and I can't see what the regression was at any other spot. So this tends to be very focused on the now, and it's really useful to do that. The data we're seeing that was going into the close is the time it's the least useful, however. So we will talk a lot more about this when the market's open, because that's where that becomes really, really useful. And again, you're going to hear this over and over again. Most of the tools that I use scalping are designed not to tell me where to make money and where I can make money. They're designed to tell me when I'm making a mistake. Do you guys get that? This is really important. The purpose of this wave volume and having some sort of trend in it is, if I'm shorting these strength moves up, I am on the wrong side. I might get lucky and catch scalps short on each one of these pushes up, but I'm trading the wrong way. I am off sides, and that will be really obvious. So that's the purpose of that, because I'm like you. I have biases like every other human being, and I get really dialed in. I might short that once or twice, and it works really well, and I'll be, okay, I'm shorting the rips. And that could be absolutely the wrong set of tactics. So that's the purpose of this. Jeff, are you being an idiot? You might have gotten lucky, but it will warn me if I'm doing something wrong, because I will be seeing a strong move up, and why am I shorting this? I really should be looking for places to buy this, not looking for places to short it. And for me, that can be the difference between having 50 winners in a row and having 25 winners and 25 losers over the course of the same trading time. And it's that simple. It just keeps me focused on what's happening RFN, and I'll get to RFN in just a minute. But so the purpose of the little linear regression views is, what is the current range and how aggressively is the range being traded? And again, that will be much more visible once the market is in fact open. But that is the only purpose of that tool. There's no other one. There is some information that regression gives you that's uber valuable. For example, when you see it the way it is now, where the longer one is, roughly going sideways, or, some semblance of sideways, and then the other one is doing something else, inside of it, that tells you that, we're kind of trading within the range and we're at one end of it or the other. If you see behavior like this, where it looks like that, and sorry, I'm not drawing straight lines here, and one's inside of the other and they're parallel. This is a trend right here. That is exactly what a trend looks like. I'm sorry, I'm trying to write with my mouse. That's a trend, whether it's going up or down. When the regression's telling you that, statistically, the short-term behavior and the longer-term short-term behavior are the same. So the market is within a small range, trending within a slightly bigger range. And so you're looking for places in this circumstance to get long, and you're looking for places in this circumstance over here on the right to get short. So that is a useful behavior to understand with linear regression channels like that. But again, they're not trading signals. You don't trade off of that. It's just telling you what the current conditions are statistically. And that's important because, again, humans tend to make mistakes by being biased and thinking that there's something there that isn't there. And that's why this is so helpful. Okay, so that is the Ninja Trader portion of our program. That's what I do with Ninja. And the reason this is legacy on Ninja for me. That's one reason I have it on Ninja. The other reason is I really like the visual on Ninja of equivolume bars. These bars that get wider with more volume. That's what you're seeing here. It's just a really good visual for me. There's a similar thing in Sierra Chart. It's not quite as visual, but you can certainly duplicate all of this, and there's examples of that in the pit that you guys can all check out at your leisure. Okay, so that's my Ninja stuff. Let's put that away for now. And we don't need these. I just did that twice. I'm sorry, I'm mousing too quickly. I want to delete. There we go. All right. Now let's take a look at what I do in Sierra. And my Sierra stuff is mostly the footprint related stuff, because Sierra does footprints really well. I have not had the same experience in Ninja. I think, if you have no other choice, you can do some of this in Ninja. Okay. Lee's free print does some of this stuff, but Sierra is a better platform for footprints. It's just that simple. And what I do here is, let's do this. And you know what? I'm going to bring up the Ninja stuff too, just because it's relevant to explain what the purpose of this is. So let's put that next to it. And let's do one other thing here, which is, okay, that's that. Good. All right. So if left to right, again, if I'm looking to see if there's any sort of trend, whether there is or isn't, that's the purpose over there and what the energy in the trend is. If we're in a range or if we're trending, I can see that on the LRCs. And the purpose of this next set of tools, these are Sierra Chart. They are 15 seconds. So they're basically just like these small panels in Ninja, but I'm only looking at the delta footprint. So there's no bid ask on here. It's just the delta. And I've got the LRCs plotted on there too, but I don't have them showing slope. I have them just showing an absolute level. And so the one that's pink is, and that says LRC S, so as in slow, and LRC F as in fast. So I'm just looking at the range and I'm looking at the delta bar by bar. So it's kind of a way of qualifying what's happening over here. For example, if we're at the bottom of the range, are there buyers there or not? And it turns out at this particular range, it was right at the close. There was a lot of buyers there. You can see that delta, but it didn't impact the price. So we kind of just closed right on that price with a bunch of buyers. What would that tell you if you're an order flow person? That would tell you that people were covering their shorts going into the close. And that's exactly what you'd expect. And that's the purpose of this tool. So if I see that I'm at an extreme of the range, what's going on in the order flow? And where am I in the volume profile? That's the other thing. There's a volume profile on here. Again, that volume profile is delta only. I'm not showing the bid and the ask. Scoot this over so you guys can see it. And so it's just showing me, for example, where there might be a large delta on the buy side or the sell side to lean on. And that's one of the things I'm looking for. If you remember on our syllabus, I'm looking for places, on our syllabus, I'm looking for places to lean on. And that's what the idea of my tools are about. And I'm going to come back to that. But there's one other piece of that I posted here. This scalping is simple. This piece right here. What's the way to blow the font up real quick? The keyboard, JVC?
Control plus or minus.
Control plus or minus. There we go. Now you can see that. So which direction are we going and with how much energy? So you can see all these different tools are asking and answering that question. RFN is right fracking now, not what was the energy 5 minutes ago, not what was the energy an hour ago. What is it right now? So for example, if we're watching this bar, let's say this wasn't the close and we saw this, aggressive buying and price not moving, we would say, okay, somebody, there's somebody under the market there. There's a passive buyer. And so it looks like selling, but it's being bought at the moment. That's how we'd interpret that if we weren't closing. So the idea of which direction are we going, if any direction. If we're not in a direction, we're in a range, and they're both useful, but we have to decide which we have. If we can't make that decision, we can't trade, because trying to trade a range when the market's trending is a really good way to get run over with a lot of size. And trying to trade a trend when the market's in a range is exactly the same problem. You're just going to keep making cuts death by 1,000 cuts over and over again. So it's really important to get this question right. Are we going one way or the other? If so, with how much energy? And you're right now, not an hour ago, not 5 minutes ago, right now. This is critical. And then ask yourself, how is that energy changing? And is the current range, or is there any inflection point, whether it's a big delta or it's the edge of the LRC or it's the edge of the session? Is there anything nearby that's important? And if I ask those questions of myself, the answers I should come up with are, so I sum those questions up, which direction is most probable, thinking in bets, next? So if I just had to say, all right, it's going to go up or it's going to go down, pick one. That's the first question. If I can answer that question with any sort of probability, 51% or better, then I'm already in the groove. And if the market's trending, I should be able to answer that with much better than 50% probability, right? And if it's in a really tight range, then I may not be able to know which direction I'm going to get immediately, but I know where I'm wrong about that. That's the beauty of ranges. If I'm trading the edge of a range and I'm saying, well, ranges tend to hold unless they get broken aggressively, so it's probably going to go back into the range. So again, I'm thinking in bets, and I'm watching for information that will tell me, no, you're wrong. It's going to leave the range, like a big delta jumping in. So that's the equation. And then we're looking for what's most likely to happen, how probable is it, against what risk. There's times we take scalps that are really obviously against the trend, like, scalping after a ledge breaks at the all-time high when we get a price rejector and it's clear there's selling coming in. Great place to scalp short. Why is that a great place to scalp short? Because it's not so much that you're sure it's going to go down. It's that if it doesn't go down, your risk is really limited because you're already at the all-time high. But if you try to do that same thing in the middle of a range, where are you wrong? That's the problem. So this is a complex and simple at the same time decision that you're making with discretion. And so you have to get good at just simplifying it and making it quickly. And that's going to be the entire focus of most of our setups. Each setup handles those questions a little bit differently as to what your reaction is. But this is the information that you need to focus on. Which way are we going right now? With how much energy right now? How is the energy changing? Is it diminishing? Let's show some examples of that. What does that look like in real life? Well, here's a really good example. At the open here, again, Friday, which way are we going? We're not. We're in a range. Is this a range I want to trade? No. Why? It's way too aggressive. If I am up here and I'm saying, okay, I'm going to be short, and I catch a great short, and then in a heartbeat, it goes the other way, that's not something I really want to play aggressively. I might buy that low and I might sell that high, but I'm not going to do it real aggressively because it's not clear at all that those boundaries are going to hold. But once we start seeing a more predictable behavior, then I can say, okay, if I get long, in the middle here, we're heading up and we've pulled back. We went up 72K, we pulled back 28. So right now at 07, right there, I'm smack dab in the middle of the range. But if I got long here and I'm wrong, it's going to be pretty obvious pretty quickly because we're going to break that trending volume behavior that we've started to establish. So that's a spot I can lean on that's in the middle, whereas a middle lean here would be just suicide because I can't figure out where I'm obviously wrong without taking risk in both directions. But here, the risk is only in one direction and it's only a couple of ticks. This works or it doesn't. So you can start taking measured bets when you have good information. But when the information's confusing or it's contradictory, like it is in the example we were just looking at, then the answer is don't take the trade and wait for better information that can give you better probability or at least give you a clear spot of where you're wrong. Because that sometimes is even better than having good probability. Because probability is a funny thing. You can be a 90% winner trader, but the 10% can totally ruin your profitability. On the other hand, if you can get really good at having your losses be small, then your edge, by definition, will grow your equity curve. And it really doesn't matter how big the winners are, as long as the losers stay small. And I know for many of you that's counterintuitive, but that's the reality of scalping. And if you incorporate this around any sort of structure, which is the other piece, remember we're looking here at the very fast footprints. Let me put the other one back up. Hang on. I minimized it by accident. It's not that one. I've got some of these running on another monitor, so it takes me a minute to, whoops. Oh, that's right. We did that. Okay. So if I'm watching this action and I'm saying, okay, it's at the edge of a range and, we have this trending behavior, so maybe I'm thinking long there, then another piece of that picture is to look at the structure. And so this is an example of the structure of the session using 30 minutes. And again, this is all review from TickMaker. These are ways you can qualify the edges of your setup. So if I'm looking over here and seeing, okay, we've got trending behavior and okay, we're at the top or the bottom of the range, I can see what the trading is going on at that point, and I can see if there's some passive behavior of some kind going on, like we have a price rejector above that. These are looking for places to lean on. That's what this is about. So read this again. Okay, which direction are we going with how much energy right now? How is that changing? Is it diminishing? What's an example of that? Well, let's go back and look at that 1 minute. So once that trend started and got going, right? So it was pretty clear it was trending. But then once we got to right here and we did this, you could say correctly, and that's the right interpretation, that the energy started to diminish. Instead of being one-sided, number one, it stopped going up as aggressively, and number two, we started getting downside aggression. So this is ebb and flow, and it's not clear at all what's going to happen up here. So shorts and longs are both too risky because we're pausing in an up move, so we could continue that move. We could go down, so being long could be dangerous. Going short, being short could be dangerous because we've been going up. There's just no edge here, so you just don't trade it, unless that trading was showing some sort of edge range behavior. And that's why, when the trend ends and we go into ebb and flow, you look at the ranges and you look at the quality of the ranges. Okay? Context is key. Absolutely, Elias. That is 1,000% correct. Okay, so that covers my fast footprints and my contextual footprints, which is pretty much all I use for scalping. A 30-minute and 15 seconds. I do have the entire session running on the other monitor, but I will rarely, if ever, make a decision about a scalp trade based on the entire session. I will look at the entire session, but I really want to see what's happening in the most recent rotation, like, this particular one up or this particular one, this price rejector at the low and this price rejector after it took out the UB there at the high. So, there's a story being told by the context of the order flow over time, but we're interested in using that story as context only and focusing on the short-term action and reaction and trading that. Okay, I don't see any questions, so I'm going to just throw up the last thing, which I can't show you any detail about because the market's not open, but the last piece of my puzzle is over here on the far right, and this is Jigsaw, and what I do in Jigsaw is I execute my trades. I can trade directly on Ninja, I can trade directly on Sierra. I do have another Sierra window you might see if I decide to put a position on over there. We can trade the micros in Sierra directly into that account. These are all different financial accounts. They're all real money. We're going to trade for this Scalpathon on Jigsaw through Ninja. And so it's trade copying, and I'm doing both live money and an eval at the same time. So that's what you're going to see. And when we do trade live, I will show you why I like to execute on Jigsaw. It has a couple of characteristics that are just not available anywhere else. The most specific of them is if I want to change the price of an order, I literally just click on the price. And in Sierra, for example, I have to drag my order, and that works okay. But under pressure, scalping with a lot of size, I prefer to use a mouse and just be able to click. I don't want to have to drag because dragging can be dangerous. You can drag to the wrong place. So you'll see that live again once we get some real data going starting this afternoon with the reopen. I also run On my Jigsaw, I do run liquidity. I run the liquidity heat map in Jigsaw known as Auction Vista. And again, because there's no data, we can't see it. But when I have it up, I do it. This is it right here. And I'll leave up ES and micro ES, and we will watch the liquidity and compare the liquidity to the range and to the traded volume or the delta volume against the liquidity. That's really powerful. That is the only place that I really pay attention to liquidity. Otherwise, in other words, bids and asks. I tend to focus much, much more on what people have actually done, traded, rather than what they're advertising they might do by putting orders up. But there are some components of an edge looking at the order book, particularly when we're really volatile. Looking for where there's big liquidity, resting in the book is useful. So that is what we will use that for. Okay, that is all of my primary tools, and we're coming perfectly up on an hour and a half, which is where I wanted to be. I didn't want to bore you guys to death. I didn't want to give you too much information. Hopefully, I have given you the perfect balance. So let's get our syllabus back up and let's see where we're at. Okay, so there is our syllabus. We have done my trading point of view. That's what POV is. That's what am I looking at, the tools and how I use them. We've talked a little bit about setups. Like I said, we're going to do that, of course, across each session. And I will make a little PowerPoint for each one so you have a document to look at. I'm not going to emphasize that today because they're much easier to look at when they're actually happening. So trust me, you will get setups. You will get basically a three-pronged approach to each setup. For example, if you've been around TRG, you've heard me say, ledge break setups, 3 rules. Number 1, no high volume node between you and the ledge. That is a barrier you don't want to have to overcome. Number 2, you need to be going to the direction of the ledge. If you're trading the other direction, then the ledge break's irrelevant because it's not going that way. And number 3, we have to be relatively close to a ledge to break it. A ledge being, the volume boundary of a session. So for example, the ledge of Friday was right up here at the high. And so if we were thinking that was going to break, those are the considerations I would look for. We need to be above this high volume. And we need to be going that way, and we need to be within. And I used to say 6 or 8 ticks. With the recent volatility, I've stretched that out to about 12 because I've seen ledges go from 12 suddenly, so recently. Okay, so that's an example of how I will identify setups. I will give you just quick criteria, and then we will probably see 100 examples of all of my setups this week, each one. In other words, hundreds of each one. So I don't feel like the need to really define them. They're really simple. The wave volume setup, another simple example. Let's just review that one. Let's use a different instrument. Let's use YM. Oh, you know what? Let's use oil. It'll be fun. Oil was crazy the last few weeks or last week. So let's use oil. So can we do the exact same thing with the wave volume idea on oil? I don't know. Let's find out. So I'm just going to go to a quick example. So yeah, this was the overnight, and I'm using the overnight of equities. And then this is the equity initial balance, not the pit open for oil, which we trade to, but these marks are for equities. And so watch what happens right here. Look at this. Decent move down. You could have played that short. There's plenty of, greater volume to the downside. So this was shortable. And then we kind of formed a spot right there where look at all that aggressive delta kind of stopped. So that might be a high volume reversal potential. You could start looking for a long there thinking, well, if I'm wrong, it'll be really obvious, right? And then, we ended up getting a really aggressive trade off of that with some really good springs. So as the market settled down going into the close. So there's 2 simple examples in CL. Shorts down to that point and then longs. And again, the behavior, up 6, back 1, up 3, back 3. That's where it went into ebb and flow right there. But till that point, up 7, back 2, up 6, back 1.7, up 3, back 3. Warning. That's where it stopped doing that, right? So it should become second nature to you to just see that stuff. I'm going to show you literally hundreds of examples. Okay, I'm going to put that back to YM. And okay, so that's our syllabus. I think we have covered everything. Focus on this, guys. This is the simple kind of brain imprint if you want to scalp successfully. Just keep asking yourself these questions and don't worry about anything else. And I'm going to show you how to do this. Which direction are we going? How much energy are we going in that direction right now? Forget what it did the last time it went this way. What's it doing right now? And then is that energy changing? Like I just showed you in oil, it was going really good. And then all of a sudden it went to two-way, in an instant. So you want to be very perceptive of that. And then you want to do that within the context of nearby inflection points like high volume nodes or overnight highs and lows or max deltas or min deltas or the edge of the range or the other edge of the range. Take your pick. Those are all valid. And then sum it up to, can I predict what's going to happen next with some sort of odds that I can trade? And then comparing those odds to the risk that I have to take. And is there a place I can lean that protects myself, like a high volume node or, as I said, a max or min delta? And if you stay in the now and do that, it's astounding to me, even when I'm doing it, how well it works. And the only time it really doesn't work is when I get stupid and I start thinking that I'm going to know what's happening and not let the market tell me what's happening. That's where you can screw this up, and that's the only place that in my experience you can screw this up. So, questions? Let's see. I see one. Jeffrey, interesting what you said about Sierra charts to be laggy to execute. What data service were you using connected to Sierra? Because there's been some problems with some of the sim feeds in Rhythmic. I've noticed that. I run both live data and the sim, and I've noticed that some of the sim providers have had a little bit of lag. But interestingly,
I think he's actually talking about his human lag of dragging price.
Oh, the dragging. Okay, right. Okay, yeah. Oh no, he's not. And
Rhythmic. Oh, maybe. Okay. Yeah.
There were some issues. There were some issues with Rhythmic Sim last week. Yes. And the dragging, that's a key point, Jeff. If you have any lag and you're trying to drag and drop, then your platform is going to constantly be battling with you. Whereas if there's lag at all in Jigsaw to Rhythmic, what happens is I can still talk to Jigsaw. It just might not necessarily communicate that instantly to Rhythmic, but I can still move my parameters without that holding me up. And that, being able to just, let's say it's trading at 45 and I want to move my stop from 40 to 44 quick. Being able to just click on 44 and have it know that that's what I meant. That's just really powerful for me. And again, I'll show you this live. And I will do both. I will trade, in Jigsaw, and I will trade next to it in Sierra using, just the current footprint and dragging and dropping on that. I don't really use a dome in Sierra because the dome is really just next to the footprint anyway. It's the same information. I don't need to see the liquidity there. So you'll see all that, and we'll go over the pros and cons. But good point, good question. And yes, that did happen last week. I witnessed that myself. It's interesting. Earlier, the week before, I saw something even weirder. My real money data was laggy because there was so much volume that we were in fast market conditions, and they literally couldn't publish the real trades quick enough. And so there was some lag time in real money trading, but the simulators were all working fine because they weren't actually executing trades. So, there was a difference between what the simulators were saying the price was and what the true price in the market was. And there was a couple times I was able to use that to game the sims. But that only occurred 2 weeks ago. I haven't seen that since. So anyway, all right. Let's see. I have a question from Lance for entries into Wyckoff pullbacks. Are quarters still pretty? Absolutely. Any place you can lean in a Wyckoff pullback is a good place to lean as long as it's within the framework of the Wyckoff spring or upthrust that you're trading. Exactly, Lance. So, for example, if I saw this kind of behavior at that point in the day, and I was looking for longs there, and let's say I was watching that spot, I wouldn't be watching it on this chart. I'd be watching that on the dome, and I would have seen that that wick there. Kind of, we would have gone down right to the initial balance and immediately got aggressively bought. I mean, look at that; it was overwhelming. I would have seen that on the dome, and so it would have been both. a Wyckoff place to lean, I would have seen the inflection point in the trading on the dome. And so there would have been like the bar by bar delta. You would have seen it in the break of the range because, look what was happening. We were going up strongly. We came back, we tested the low of the range, and then we sprung right back up. So the beauty of all of these different things, and you touched on it, Lance, is that these are different tools that are looking at the same information. The only thing we are looking at is price and volume and which side of the tape that volume is on. And these are all tools that are looking at that just from different perspectives. And that's why this works so well. We don't have fibs. We don't have MACDs. We don't have moving averages. We don't have any nonsense that isn't directly related to what's going on with the price and the volume right now, because that's all that truly matters. Price matters. And in order to move the price, you need volume. You need aggression that's overwhelming passive traders. And that's really visual using these tools. So it's really hard not to see it. And if you're wrong, it's really obvious. So absolutely. Jan, when entering on a pullback in a trend, how can you tell when the pullback ended? Yeah, you've asked me this in the pit and in the Facebook as well, Jan. And the problem is you're overthinking this. You don't know conclusively anything. And I know as a PhD mathematician, this is a really hard concept for you, but it's important that you overcome this for yourself. I've seen this as long as we've known you. These things aren't clean cut. It's pattern recognition. How do you know it's over? By seeing when they end so many times that you just get the hang of what they look like when they end. And the thing that I look for is, it's really obvious when we haven't had a lower low or we, let's look at the one you asked me about on the Facebook group. That's one of the best ones we've had in years. So let me just go there real quickly because it's displayed there pretty clearly. Or you know what? It's in the pit too, isn't it? JVC, where is that? It's in the pit. That trend conversation we've been having about the wave volume. It was on Facebook, but I thought I also posted it on Anything Goes. Hang on. Under wave volume.
I mean, I'll add something just for you, Jan, since obviously you're in TRGs. How about you look for a price rejector at the extreme of the pullback bar in a reasonable place?
That's one way you could do it. There's a million ways you could do it.
It's not the only one.
And the point is, all you're trying to do is game the odds for yourself. And you can do that any way you want. I like to do it visually. I like to look for a place. Where am I wrong? Here's the thread right here. Okay. So this was the example of that. And, it was a really clear one. And I get what you're asking me. And the point is, hang on here, I'm trying to get Facebook to show me this one. The point is, where does that end? Well, it kind of did toward the bottom of that, but it's always different because the volume's always different and the instruments are always different. So you just get used to seeing the pattern and learning where it's no longer the pattern. So here, let's do this. This is ES. I'm going to just randomly grab an instrument in time because we've had this going on in lots of instruments. So let's go to gold. I'm going to pick gold and we're going to look at 1 minute gold and we're going to scoot all the way over. And I'm going to go get some more days real fast here. I only have 3. Let's get 5 days of gold. Okay, and I'm not even going to look at it. I have not traded gold. I have not paid any attention to this. Let's just see if we can see these patterns anywhere and where they start and end. So, and I'm randomly just going to places in time. Okay, here was a really aggressive down move, an HMOMO. We're going to talk about that setup. And then, obviously that ended. So let's say here you started looking for the trending behavior. Okay, so this will be our first example right here. So it came down really aggressively and we weren't in that. And we got a high volume reversal on a bottom. And we're clearly in ebb and flow. So this HMOMO ended right here. It has never done this before in this pattern. The pattern is no longer the pattern. Now we are going what rookies would say sideways. What I would say is ebb and flow after an aggressive HMOMO down that ended in a high volume reversal. And now we are going in this ebb and flow, deciding what to do next. Okay, that's the condition right now, right fracking now. Okay, how is it changing? I don't know. Let's watch it. Ebb and flow, ebb and flow, ebb and flow in a range, bottom of the range. still bottom of the range, made a little bit of a lower low, less volume, still in the range, still ebb and flow. Nothing happening here of interest. Wait a minute. Hold on. Okay, that's the biggest volume we've seen since we went into ebb and flow, right? So and it made a higher high. So pay attention. Might be going up. Tune in. Low volume pullback of that's holding the range. Low danger place to be long, Jan. Also low danger place to be short, but the high volume is on the buy side. So if you're going to play this, you're going to play the long side. And you're wrong if it breaks this range at all. So here you're wrong. Here it's a legitimate long play. What happens after that? Higher high again on double the volume of that pullback. And the pullback off of that peak is 700 versus 3,800. Again, low volume pullback. We have a definable trend going at this point, and you're buying the pullbacks until we go back into ebb and flow. Perfect example. It's that simple. And learning to read it is just a matter of experience, because it's not ever clear. It's just, and I'm not talking about Everclear, the stuff you drink. It's not always clear. Most of the time it's not clear, but you can see which side is stronger. And that's all you're looking for. Which side is stronger, and is it stronger enough that it's trending? And at this point, it started to do that. So that was playable in there. You never know what's going to happen after that. You just play whatever you see. And again, let's find another example in gold. There's one right there. There's another one. Here's a really interesting one. Look at this. Ebb and flow here. Broke the ebb and flow. And this is typical. We broke out of the range aggressively. So when you see that, you're immediately on alert for a low volume pullback to buy. So you could have done that right there. It started going up again. The spring occurred right there. The low volume pullback that was really the one to play, though, was the next one, because you got 16K up, back on 2, and it held above where it sprung from. So right there long, you're immediately wrong if it goes to here. But look what it did do. Another spring up, another low volume pullback, another spring up, another low volume pullback, tried to go in ebb and flow, couldn't hold it, and went back into HMOMO immediately. So again, it would be telling you over and over again, if you're long, you're on the right side of that trade. And if you're short, you're going to get run over. The data it was screaming that at you, whether you traded it or not. It was very clear what was happening, just using those tools and nothing else. And imagine how much more powerful you could make that by gaming that, with the delta footprint real time as it was happening, or gaming that with the 30-minute footprint of gold as it was happening, over here. This is not gold, but you understand what I mean. So cool. All right. So did you get that, Jan? Does that make sense now? It is repeatable, and you just have to learn what you're looking for to repeat. Yeah. Okay. Cool. All right. Good questions, guys. Really good questions. I can tell you're all tuned in. So let's close that and let's go back to the syllabus. What other questions are there, if any? Trade management is always critical. Remember, what we're doing here is, let me go back to the pit document, because that's why there's one piece that's in there that's critical to that. Scalping is simple, right? The key to doing this well is staying in the now and have losers be infrequent and as small as possible. Let the edge work in your favor. Well, you got to know where the edge is. And you're doing that just based on the volume and the odds, and is there directionality? And if you stay tuned in on that over time, you will be on the right side of the trade as long as you can manage risk. So you're asking yourself this: which direction is most probable? How probable is it? And is the potential reward worth it? I don't use R to R. I just look at, okay, based on what I'm seeing and where this might reasonably go to, can I get enough money out of this that it's worth putting a trade on and risking that I might lose money? And is there something between me and losing money that I know I can lean on? For example, if I'm looking to take a ledge break and there's a really just wicked big high volume node behind me. In other words, I'm past the high volume node and the ledge break is now clear path. I love that, because markets don't trade through high volume nodes quickly. High volume nodes tend to hold. So, here is that situation right here in YM. If I was looking at this ledge right here, and all of the volume is below us and we're going up, I would say, well, that ledge is going to go. And if I'm wrong, I've got all this volume underneath me to support it. It's not just going to collapse. Whereas if I was looking at a ledge that had a big volume gap underneath it, a low volume spot, that's the real danger. So, let's say that ledge had this kind of a, it was, let's say the ledge was right here and nothing below it for 20 points down to the next high volume node. That scares the hell out of me because, where do I know I'm wrong? Well, I know I'm wrong all the way down at the high volume node, and that's just way too far away. I'll go broke trying to be right with that setup. So that's how you can use any of those other things, whether it's the footprint or it's the 30-minute or it's a high volume node or it's min delta or it's max delta. That's exactly what you're doing, Jan, is you're understanding what potential does the trade have versus the potential risk that I'm taking. Okay, let's see. I see a couple of other good questions. Lance, I feel like I should always be looking at the 1 minute chart for setups. Well, that's it. That's why I have my standard view is like this. Because if I don't have any idea, my focus is always on the jigsaw domes. But if I don't have any idea what's going on, the first thing I do is I look over at the 1 minute and I say, is there any trend here? And, a lot of times the 1 minute will look like this, and that'll tell me, okay, we're definitely not trending. So then the next one I look at is the regression. Are we in a definable range? This chunk right here was actually a really good little range down there. So if that's what the condition was, and I saw that I could, evaluate that range or qualify that range with the delta and the footprint, then I might say, okay, that's a good range trade. I'm going to go ahead and take that range trade. I know we're in ebb and flow. So, if we leave the range, then I know I'm wrong. So it's really good for that. Cool, Jeff. I appreciate the feedback. Thank you. Alfredo, Jeff, you tend to know where you're wrong if the price goes below the last spring. That is exactly where you're wrong in a Wyckoffean setup. So if you're going to trade the Wyckoffean setups, you're wrong if it breaks below a previous spring. Every now and then it will make a lower low and it's a head fake. Like there's one right there. And on a 1 minute it would do that, but on a 2 minute it wouldn't do that because, it's a 2 minute. So, you can't just draw a line in the sand and say, I'm wrong, here, but the previous spring is a really good one because when it is springing like that, it can still do this without taking out the previous spring, which was right there. See, and that's really useful. And of course, just mathematics. If I go to 2 minutes, then that pullback, didn't break. It didn't make a lower low. So learn. It's important to understand that Lee and I say this all the time. No time frame is correct. They're all wrong, but understand that the difference between 1 minute and 2 minute is 1 minute's going to show you, breaks of the trend that 2 minute won't, because on a 2 minute time frame, it doesn't break. So absolutely, that's a really good way to do it, Lance. Look for the previous spring, and as long as that holds, you're probably in good shape. Because if it's in ebb and flow, it's going to take out the previous spring right away, because that's by definition what ebb and flow is. And if it's just a pullback, it might break with a lower low, but it's not going to go so far as to take out the previous spring, because that would take it into ebb and flow. And so, and again, don't look at the chart to be an indicator. Look at the chart to be an information provider on how I make a good decision. And those are very different things. Yeah, monkey. I'm going to talk a lot about monkey and scalping, because the number one mistake most rookie scalpers make is they get monkey, and I will address that over and over again. We'll talk about that literally every session. So. And you're right, that's a big problem. But this is a good way to keep it from manifesting itself, which is why I use that tool. It's not an absolute. I don't look at that line and say, okay, if it goes below that, it's a short. If it's above it, it's a long. No. And if the market's real volatile, I'll look at it on 5 minutes and say, are we keeping any sort of trend here? And sometimes I'll see, yeah, there's a really strong trend, but then I'll zoom in on that on 1 minute. I'll say, yeah, but good luck trading that trend, and I'll get really discriminating, and I'll say, okay, if there's a really sweet spot where maybe I can, low risk join that with a couple of ticks. If I'm wrong, then I might do it. But that's what you're doing. You're getting a sense of, how tradable, how much risk do I have to take, et cetera. So yes, those are all very, very good points. Awesome. I love when people have aha moments, Elena. Look, if you guys do nothing over the next week, but get a couple of aha moments or a couple of golden nuggets, then I have achieved my mission. None of you are going to come into this session knowing nothing and go out the other end as a professional scalper. But if you just get a couple of good nuggets that can keep you from losing money and maybe help you make money, then I have achieved my goal. So thank you, Elena. I love that you're saying that. And Jeffrey as well. Cool. Thank you, CK. All right. Are there any other questions? I don't want this to drag out. We're at 1 hour and 45 minutes now. I want to try to keep these relatively tight for the people watching the recordings. And, if you need to focus on anything, build this into your head. Which way are we going with how much energy right now? How's that energy changing? And are we anywhere near something significant that I can lean on, an inflection point, the range, the edge of the session, max delta, min delta, and if you add all that together, you should be able to immediately understand if you have an edge at that moment, at that right fracking now moment. And if you do, take it. That's not a monkey trade. You're trading your edge. And that's where the distinction between monkey happens when you're not paying attention to this sequence of thinking and you just, I'm going to go long because we're going up. That worked. I'm going to go long again because we're going up. That worked. I'm going to go long again because we're going up. That worked. And so you just get in this mindset of, okay, I'm buying the pullbacks, and you're not paying attention to the energy and you're not paying attention to your tools. And the next pullback isn't a pullback, it's a reversal, Jan, and you're off sides with 20 contracts. And that's how you avoid doing that. By not doing that, you don't get into a mental rhythm. You keep questioning what's happening over and over and over. Thank you. Thank you, Jan. I appreciate the feedback. Okay, we're going to go ahead and say burning desires going once, which is our way of saying we're going to wrap up. Are there any other questions that you just can't wait to answer until next time, but you have to know the answer right now? That's what burning desires are. I don't see any. Or any comments you just want to make? Cool. I don't see any. Great. JVC, anything you want to add, or is it a wrap?
The only other thing I can think of is just that the videos for this particular, what are we calling this, workshop, boot camp, whatever it is, are going to be unusually large given the 3 hour, 4 hour, whatever that they could be running. And even though the edited version will have all the dead time when there's nothing to look at edited out, it means I'm going to be waiting an unusually long amount of time for stuff to get processed and downloaded and all that. So while I will aim, as I always do, for getting these things out pretty much right away, I usually, when I'm caught up, I'm under 6 hours, and 24 is very rare, but this might be the time we see some 24-hour stretches given the size of the videos I'm going to be dealing with. So I will do it as quick as I can, though, for all of you.
Cool. Okay. One other thing I did forget. I want to just tell you what's coming up next. I will do that at the end of every session. So we did the intro session. We're doing the Globex reopen at 2:45 p.m. my time, 4:45 Central. That's next. Then we're doing 3 a.m. my time, trading Europe into the pre-open tomorrow morning. That should be just fracking crazy with everything going on over there. And then we'll do the Ides of Monday. You guys are guests at that. These links are all in the stream already. And then there's one other session tomorrow that's not on here that you guys are invited to, which is the CME session for the initial balance. That is in the pit already. And the information on how to join that session is there under all of the links to live Zoom sessions. That one is this one right here. This one, it is session 5. So that's the one that isn't on this little calendar yet, but I will update that. And this is how you join it. So we actually have today we have one more, and then tomorrow there are 3 a.m., 5:30 a.m., and 7:30 a.m. California time, respectively. Okay, that will do it. And one more. Thank you, Charles. I really appreciate that. Look forward to doing that. I think it's going to be a blast. I think we're just going to see some really cool trading, and I'm excited about it. And I just hope I can keep my energy up. I'm really focused on that, getting enough rest and really trying to crank this out. So let's all keep that in mind and take a break between now and the reopen. I will see you guys then, 2:45 my time. Have a good day.